Oh my God. So, if the data couldn't feel more poised as fake, but I'm not going to call it fake, this data could be real. I don't want to tell people who are doing a job collating this information that they've got it wrong. It really feels like, though, we've been flogged a dead horse at the moment, trying to get everyone along before they drop it. But who knows? The Fed have done a good job of manipulating, and that was their task. Their task was to control the labour market and inflation. Those are those two things they keep screaming about. Now, they've done a good job of controlling them, but they've manipulated them to be able to control them. They've given us a couple of clues, though. And one of the biggest clues for me was when we were told that we weren't going to get an interest rate reduction, let's call it, in early August. And we weren't specifically told it, as the notion was out there. So a lot of investors got a bit shaky boot and then went drop. They dropped the market by about 500 pips. Now, for me, that's a gauge. I've now been given a gauge to understand that was the appetite for us to reduce our positions to if we don't receive an interest rate reduction. So now we did. And if you look back at 2023, what we actually were told is that we're going to be a 0.5 to a 1% reduction through 2024. But now you understand that, and now I understand that, I'm thinking to myself, well, hold on, we've had half of that. How much was actually priced in? And I think 1% was priced in. Again, no guarantees, who knows? But let's look at it. That percent being priced in, that means that we're expecting 0.5% more. So at this next meeting, if all the data's screaming correct, that hallelujah, hold on, America's great again, and the Fed's done their job and they're doing their victory laps, why exactly would they need to drop the interest rate anymore? By doing that, they'd surely be encouraging inflation by asking people to spend more because they're borrowing at better rates. Asking businesses to be more profitable from the simple fact that when they borrow, or the borrowings currently that they have, maybe their bridge loans, whatever it might be, are then, which are set on variable interest rates, are then suddenly going to be more rewarding to them. So the chances to me seem like they're increasing that the Fed will do nothing at the next meeting, or they might just stick with the 25. Again, that's less than what we had before. Now, trading doesn't work this way solely, but if you were being quite rudimentary and you look at it, if we had 500 before, and when we had news about the Iran missiles that were sent over to Israel, that dropped the market by 100 points. So let's call that a 400 point drop remaining if we were going to receive nothing. However, we've already received half of that. So that means that there's potential of another 200 pip, and I might have said points before, I mean pip, drop yet to come, if we're then placed with that information. So what's really important right now is the Fed. It's the Fed. It was before, it still is. They are really pushing and steering this forward in a way where we're hanging on the Fed's words. It's really key. I think it's really key to understand that if we get nothing, whatever the market does, I can imagine that they will shake the tree a little bit, reduce some positions, because it hasn't met their expectations. Again, I could be wrong. Could do nothing. And everyone loves it off, and there we go. We're at 6,000 on the SPX. But my mind is telling me we want our 1%. So let's see what the Fed has got to say. That's what's next. Keeping our ears and eyes open. They've got the FOMC minutes from the last meeting, and we'll be able to see their kind of dovish or hawkish perspective. We'll be able to see what they're laying out. It's been very scripted even on the previous one, so it may be that we get nothing. We just get the standard, oh, here we go, we can't give you any information. We wait for data because we're data dependent. And we're left with nothing. However, we've also got two speeches today. We've got data this week. You've got inflation data coming out this Thursday. I think we'll be in a place where we can understand this better coming out of this week. But it's the Fed. The Fed. I'm not sure how JP is carrying us at the moment, but he's carrying us all. My guy. He'll deserve a medal at the end of all this, I suppose. Maybe an SPX medal of some sort. Hope this helps. Hope this perspective helps. Again, you can't trade on this because it's not going to be an exact science of 200 pips guaranteed if that's what you're told. It's just a notion of the sentiment that we're seeing. And I believe that we've been given some really good keys here. We've been told what the market didn't like when it didn't receive it. So using that as a gauge, we should be able to feel what it will do again. Higher for longer just means there's either an issue or inflation is a potential problem. By the 5 year, they've told us previously, they showed the 5 years going up. So they do recognise, although they're controlling it now, that it will continue to go up as people become more confident at spending with the kind of money they've got coming in and out within households, and businesses recognise that this is their neutral rate, so they will continue to progress further forward. And that's within the labour and everything to keep pushing the economy forward. It will naturally, inflation should creep back up. How do I know this? Again, can't guarantee any of it. This is not financial advice. You shouldn't trade on this. This is just me telling you what I see. And if it's useful, great. If it's not useful, don't sue me. I'm just seeing what I say, saying what I see. That's the way. I'm just saying what I see, and hopefully it helps. So, JP, I'm waiting to hear what you got to say for yourself, mister. If you don't change it, I won't be too upset. But I'm not a bear and I'm not a bull. I have learned having no bias is your best case, and just being ready for any direction is also the way to trade. Again, not financial advice. You guys stay safe, happy trading. Hope you're all smashing it. And I'll wait for FOMC before I upload another one of these. Remember, like, follow, and subscribe, and follow out for the next stuff. I'm doing a daily vlog as well, which I'm just showing some of the stuff I'm doing, trading, some of the kind of strategies, and more than anything, being apparent when it's opening to have a look at what I'm doing and if it's correct. There's stuff that I do wrong, and I'm happy to share it. Hopefully, I learn from it again and again, and progress going further, and same with everyone out there. I've been trading for about 5 years, so I'm no professional. I am no professional. Do not follow trades off the back of what I'm saying. Again, I'm just saying what I see and hope it helps anyone else out there.